So in terms of risk management, there are many ways actually. So it depends on your personal profile, depends what sort of trade you're taking and what kind of positions that you're taking in the market as well. So like for myself, if I based on the rules that is set in the for general, right, is the 1%, 2% rule. Yeah. So you base on your capital amount, then you base on 1% of your capital amount, that is what you take per trade. But again, whether that works for you, it is still a matter of you finding out about yourself first.
So now we have talked about risk management strategy and some of the features that IG platforms actually offer for our clients. I think I want to move on to the next segment, which is about trading psychology. They always have this term, trader's mindset. So in a way, Shalom, what does trader's mindset mean to you?
So if you ask me after trading for so many years, the expectation of you when you trade. So are you here to be rich? Are you here to make quick money? That's the question you need to ask. Because trading is not like a holy grail method of you making lots of money overnight kind of thing. So it's a journey. So trading psychology is something that you need to tell yourself, right? Oh, this is just a journey for me. It's a process long term for me to grow my funds or to grow my wealth in some way. So getting that right mindset, it's very, very important. Yeah.
So Elvin, what does this trader's mindset actually mean to you?
Okay, like trader's mindset, trader psychology for me is more of a person's like relationship with money, right? So from what I observe, like most people when they trade, they are not balanced in terms of how they view profits and losses. People tend to view losses with more optimism and then profits with more pessimism. Meaning to say, like let's say there's a $500 profit on the account versus a $500 loss on the account. People will tend to close the profits earlier. Because they are afraid of losing it back to the market. Whereas when it's a $500 loss, they're more optimistic, like, okay, the market might rebound today. So they hold on longer than they should. So sometimes it does play out, sometimes it doesn't, but this imbalance of actions, right, for the same figure causes them to, over the long term, lose more than how much they tend to make.
So they hold on to their losing position in hope that you'll recover, and then things start to just spiral.
You start to find news to justify why you should hold on to this losing position. And then when holding on the profits, you start to doubt yourself, like, maybe it will reverse tonight. I better close it first. But don't behave the same way when it's a loss.
So I think it's crucial for traders to actually have a trading plan. Like what you mentioned, I think it's important to have a trading plan and then to stick to it. So in a way to have that kind of discipline.
Like I catch myself doing this when I see the trade analytics function on IG, right? They give you the average holding time of winning trades and average holding time of losing trades, average profit per winning trade and losing trade. You can see down there it's quite obvious that it always leans towards the losing trades, you're holding longer than the winning trades. So I think it's good for you to always look back, reflect and analyze your trading behavior through the trade analytics to understand what you are doing correctly and wrongly, and then try your best to fix things from there.
At IG, we know that timing and precision are everything in trading. That's why our platform is simple to use, fast, and packed with tools to help you trade. Whether you're trading indices, Forex, or other markets, IG gives you the flexibility to act when it matters most. Opening an account is quick and straightforward. Start trading today at IG.com.
I think there's a saying that there's a market saying that says let the winners run and cut the losers short. So I think whatever you mentioned, some clients maybe they go the opposite of that. So I think it's important to bear in mind. So if you have a winner, do not, as long as the thesis remains, do not cut, just take profit early in that sense. Okay, so now we have talked about trading psychology. I think to move on more on the education aspect that IG actually offers to our clients. So we do have IG Academy, where clients can actually head to that page, and then they will be able to find out information on some of what does a CPI, US CPI means, for example, and what to expect, for example, if you have a US CPI that has been on a strong upward trend, inflationary pressure is building, what does it mean for the US dollar, so on and so forth. So these are some of the materials that are actually being provided on the IG Academy.
I mean, at times where clients also request for certain topics of trading, like trading psychology, right? They also let us know, and then we try to find like external speakers sometimes, or internal speakers to come up with some content, right? To educate in like seminars or webinars.
Yeah.
Actually, what people can do is that we have demo account as well. They can actually download the demo account. It's free. Put into a virtual situation where you're actually trading the real market and get a feel of how your money is actually moving. So with the demo account, right, you can just imagine that is the amount of money. So how then you train your psychology, how then you train your risk management comes from that training on the demo account. Then once you are a bit more familiar, then you can then do the exact real life experience. Yeah.
Yeah, so Shalom, you have mentioned about clients, opening a demo account, put their trading plan in place, and then from there they can gauge their success rate, profits and losses. Yeah, I think that's a very great idea. So far we have discussed a lot about, how to formulate a trade. So looking at the macro, looking at the technicals, potentially, using some form of backtesting, so on and so forth. Risk management techniques, we have also discussed about that, using stop loss, and IG platform actually provides some of the knockout options for you to really limit your losses down to an absolute amount. We also share about trading psychology. The mindset is very important for traders to be in it for the long haul. So I think not trying to overtrade, being disciplined, sticking to your trading plan, I think we have discussed those as well. But Shalom, just want to ask, is there any client experience that is unforgettable to you?
Yes, definitely there is. Okay, just let me tell a little bit of story. Back in 2021, during COVID period, so market is actually very bullish during those days. There are a lot of traders who actually made a lot of money during that time. He was a new trader. He started an account with 20,000. And then what happens is that over the period of 4 to 5 months, he actually made about $2 million out of the market because the market was so bullish. So he just buy anything, he just made the money out of that. But because he's inexperienced, psychological was weak, risk management was weak, right? In a short period, during the 3 to 4 weeks, right, he actually technically lost back the whole entire 2 million that he actually made from the market. So it comes back again to our topic about risk management, psychology and stuff. Once a person can understand this concept, right, then he will be a better trader. Yes, at one point, you can make a lot of money, but can you sustain and retain that kind of capital, that kind of funds you have in your account? That's always the question that people have. Yeah, so technically very important psychology and risk management.
Yeah, able to earn the profits is one thing, but able to retain, keep it, that is also another thing. And that's where the risk management and of course the trading psychology got to be disciplined. When your thesis is wrong, you got to admit that you are wrong and then survive, and there's always opportunities another day. Yeah. So Elvin, what about you? Is there any unforgettable client experience that you have?
I mean, a lot of client experience I have is quite similar to what Shalom just said, right? Made a lot of money, but in the end they actually return that gains back to the market, cannot retain it. Yeah. So this cycle I've seen across like many clients whereby they tend to do well for a good period, maybe 2 to 3 months, and then shortly after, 1 month later, they tend to do very badly. I think the key thing is back to trading psychology, as well as knowledge of what trading is really about. Yeah. Because things change, like market conditions change, and psychology will change as well the more you make and the more you lose. If you make too much, you get overconfident, right? Start to trade bigger sizes, start to trade more. Losses, on the other hand, you start to lose money, you get a bit conservative. When actually the time is right for you to continue trading, right? If you're a bit scared, you don't dare to hold the profits for longer than you should. I mean, a very prime example would be a client who was shorting the market during the COVID period, right? Lost much money along the way. When the markets finally came down, he was making money already. So the market gave him a chance to recover his losses. But he didn't hold on because he was scared. He was scared of returning the profits back to the market and incurring even more losses. Yeah. So it's back to the psychology, Yeah. So I think like knowing what trading is about and knowing what you don't know sometimes is very key to long-term success in trading. Yeah.
So I would say probably, trading, having the right macro views, having the right technicals probably will take up, to me, 50% of the success rate of a trading. Probably the other 50% is how you actually mitigate the downside risk in that sense. Thank you so much for sharing some of the client experiences that you all have. I think we have covered a broad range of topics from, how to formulate a trade idea, how to actually adapt good risk management strategy, And last but not least, how to have a sort of a good trader's mindset. That's where the trading psychology actually comes into play. Overall, it has been a very insightful discussion. We have covered a lot of real-world examples, the insights on generating trade ideas and self-improvement as traders are really essential as well. A big thank you to Shalom for sharing your insights today.
No worries, thanks for having me.
And of course to Alvin as well for sharing your insights. Yeah. Thank you for tuning in to this episode of Check the Charts with IG. Don't forget to subscribe for more expert insights and visit IG.com to explore our platform.